Hey traders, welcome to another video. Today I want to go over my pre-market trader checklist. This is a checklist that I use every day, every morning before I trade the markets. I go over it and it helps me determine things like where the market is going, should I be long biased or short biased, and things like that. And yeah, today I want to go over it together with you. So let's get into it. So we start with the weekly and the monthly overview. So we ask ourselves, what is the broader trend? If we go over to the charts, this is the monthly chart, and we can clearly see that we are in a bullish uptrend ever since the early 2000s actually. But we can see that we've been on a very steady rise since 2022. We've topped out a bit now, but as you can see, we're still going or wanting to go higher. We can also do this on the weekly time frame. On the weekly time frame, everything looks bullish up until around April of this year. We've been going sideways, but it's still looking bullish on the long term. So we have this question marked off. Then where are we positioned in the bigger market structure? Well, we've been positioned very good because since the beginning of, let's say, this year, it's only gone up. So this is a gold chart, but you can do this on any chart. Gold has been up 30% since the beginning of this year, so really well. So are we stuck in a range or are we trending cleanly? Well, if we see here, we are stuck in a range. Like this. We are clearly stuck in a range. So for the moment, stuck in a range. Then next on the list is the market moving with momentum or is it slowly grinding? Well, as we can see here, the momentum has died out a bit, so we're grinding along. So we're still grinding here slowly. So what is volume delta and open interest telling us? Well, volume is telling us, volume is not increasing but also not decreasing. So the volume is very steady. Open interest, and we can do that. We can see that with an indicator. I don't have it here, but here is the open interest. So open interest has been above zero for a very long time, and it's hovering between 450 and 100,000. So that's quite good. As you can see, open interest has been falling dramatically here, but we don't see it displayed on the charts. So open interest has been falling and rising quite dramatically, but we don't see that here because, as you can see, open interest here has been falling. And let's do it like this, but price has been rising steadily. So that's open interest divergence. That's also why the market here tanked a bit, but overall open interest, volume and delta are showing us that there is steady volume along the way. So next up we go to the daily and the 4 hour. Then what is the trend this week? Uptrend, downtrend, or sideways? If we go to the daily, we can see, let's remove open interest here, And when we go to the daily, we can see that last week was Friday up until Monday. Monday was here, so last week was very bullish. As we can see, we went from 3,300 psychological level all the way to 3,414 on the gold futures. You can do this on any pair or any futures or even crypto, doesn't matter. You can do this on any asset, but we're focusing on gold here for the moment. So as we can see, last week was really bullish. So uptrend. Are we trending above, below, or within last week's range? As we will check last week's range. For this moment, we're Sunday today, so we haven't established a new week yet, but you could say that if we go back 1 week, we traded within the range of the previous week, so within last week's range. What major levels or key levels matter from the weekly profile? Value area high, value area low, and point of control, major support and resistance levels. So if we go check here, let's go to the 4 hour. Let's remove this one. And let's see. So let's take this week, for example. Then we would go to the previous week. Monday all the way to Friday. So as you can see, we started the week within the value area low to the value area high, but below the point of control. We went under it. We hit some resistance here. This was the last high volume node. Then there was nothing until this one. So if we take this last volume node, then you can see that we tapped it. We weren't able to close below it. So we have a swing failure pattern here. Then we try to get into the range once again on Thursday. We broke below it again on Thursday. And then on Friday, we had a big move up to the point of control and up until this, let's get it, this high volume node. So next week we can expect to hit the value area high, and then we need to see if we can break it, or if we break it, swing failure pattern, it's come back into the range and go lower again. So we'll need to see about that. Where did we open today in relation to the prior value area? Okay, here, Monday. We opened below the previous week value area. So that's always a quite bearish sign. We did a drop of around 430 points as well because of that. So yeah, where did we open in relation to the prior value area? We opened below it. Who's in control, buyers or sellers? Well, the sellers were in control up until the middle of the week, Wednesday. Buyers took control, sellers took control back. So sellers were in control most of the week, and only 1 and 2 days the buyers were in control. So what's the market trying to achieve? Market's trying to achieve higher prices. We're trying to achieve 3,450 plus. So are we stretched out far in one direction? We're not stretched that far because we're still inside the value area. We did have a nice rise of around 688 points, so it's quite extended, but it's still within the value areas. So where could we see a potential reversal? Well, we could see a potential reversal right here at the value area high. There aren't a lot of levels left where I can see a reversal. We could see a reversal here at this point, and of course here at this 3500 psychological level. Then any signs of one side being trapped or losing control? Not really. We can see that buyers are in control starting Friday London session. So the entire day buyers were in control. Let's see how that plays out tomorrow. And where are volume delta and open interest showing? Well, I think I open interest. I think I removed that. But here we can see that open interest shot up over here all the way because price went down and open interest went up. So we had a bullish divergence here. That's why price never came back down here, and it's slowly moved up, went down a bit, but then it moved up a lot. So yeah, as we can see, open interest divergences are really good ways to spot where the market could reverse. So market never came back from Wednesday to Friday, never revisited this level. Then the 1 hour to the 30 minute. How is price behaving on the lower time frames? Well, let's see. Let's put this down, and here we can see how price behaved from Monday to here. So on the lower levels, price was in a steady uptrend here. Here we have a gap. I don't know why this gap is showing here, but it shouldn't be showing because it's not a CME gap and it's not a Sunday to a weekend gap, let's say. So price came back down. Here we had this bullish divergence. Price went up, down, back up again. So higher from here on out, a higher low, a higher high, excuse me, a higher low, higher high. So we could see something like, where is it here? We could see a lower low here, or even liquidity grab here. This would still be considered a higher low, I'm sorry. And then we could see a higher high set in next week. So let's continue. What are the current micro support and resistance zones? Well, micro supports is the point of control here. We also have a high volume node over here and a high volume node over here. So let's do it like this. Let's remove this one. And so these are potential resistance zones, where are potential support zones. So the point of control here, we have a high volume node over here, we have one over here, and then we have liquidity over here. So these are the levels to the downside support, and these are the levels of resistance on the 30 minutes. Now, does price action support a move it's attempting? Yeah, price action is supporting the move up very well, so we can expect higher prices coming next week. Are we extended or are we building a base? For the moment we are extended. Remember, this is a 700 tick move, so we are a bit extended. And what are the volume delta and open interest signals? Well, here we can see that open interest is flatlined, so it remains to be seen. Open interest is in the red while the move is in the green, so that doesn't mean a lot. It means that more sellers are appearing, or people are just closing their positions for profit, or might even be for a loss, because some people will probably have shorted the breakout below the value area low here. So on the 15 and the 5 minute, we can ask ourselves, where can we enter to maximize risk and reward inside the current microstructure? So if we go to the 5 minute, where can we enter? We can enter here because there is a lot of liquidity here. There is also a lot of resting liquidity here. So if we put our rectangle here, this is a possible area where we can get in. If price shoots down through this level, we can always look what it does here at the point of control. So let's say that we are in a trade, then we need to ask ourselves, where are the potential trouble zones or friction points? It's important to know where the trouble zones are or the friction points. So if there is a value area high above you, this can be a possible friction point where price might reverse from. Where might price accelerate from? So we can see the liquidity levels, the value area low, value area high, any naked point of controls, and the liquidity zones. These are the most important ones. Where's your invalidation? Very important, the spot that you're clearly wrong. So let's say that we were entering here on, there's not really a retest, but let's say that we took our trade here. We would possibly put our invalidation below these levels. If you want to be sure or safe, then you could put it here because this is a big liquidity level here. So it's up to you how your risk reward is set and what your trading system allows you to do, but this would be a possible invalidation. If you get stopped, is there a chance to re-enter the same thesis? So let's say you get stopped out here, out right here. You could possibly re-enter here on this level, because if price comes down, you get stopped out, it might grab liquidity here and then enter, then just shoot up. So that's a possible scenario. Always keep in mind, what is the current market context and environment? It's always important to know, maybe you're on a downtrend on the 5 minute, but you could be in a bullish uptrend like we saw on gold on the bigger time frame. So it's important to keep that in mind. Which side of the edge are you on right now? So the trend is your friend until the trend no longer is your friend or the trend ends. It's always important to trade with the trend, unless you're a counter trend trader. But I personally have more success trading with the trend because I've tried to go against the flow and against the trend multiple times, and I've always had to endure losses that way. So what's the crowd doing? Are there any obvious retail traps or herd behavior? So it's always important to know that a lot of people are like watching patterns like this, which is a descending triangle. So a lot of people are here going to long this breakout. So it's important to know this because a lot of times the price here, people will enter, put their stops over here, and then big hedge funds will drive the price up to here, get all the liquidity, and then reverse and drop down. This hasn't happened here. This pattern played out very well. So it's always important to watch what happens and to think about what retail traders are doing, because retail traders, as we know, 90% of them to 95% are unfortunately losing traders. So it's always best to keep in mind what retail is doing and possibly adjust your strategy to counterintuitive what they are doing, because we are profitable traders. Okay, then who's likely on the wrong side and might get squeezed? Like I mentioned this before, if we are here, retail might be on the losing side, longing over here, and they might get trapped. This didn't happen here, but it happens a lot. If you journal and you see these patterns, you journal them, and you see what happens, you will see that a lot of times retail will be on the wrong sides of the move. What's happening with volume and delta? Always look at the order flow, look at volume, see if big moves are supported with volume. As you can see here, volume was tapering down, and here the price was also going down. Then we had a shoot up. We had price shoot up here, which was supported by volume. That's why it stayed here and it went even higher. So always look at volume and also delta. Where are the key liquidity zones? Like I mentioned, a lot of key liquidity zones are here where you can see these spikes. A lot of people enter here and put their stop losses just around here or below here. And if price goes back down, this liquidity will get sucked up and a lot of these orders will get filled. So what's the market aiming for, and is it succeeding? As you can see here, what's the market aiming for? It's aiming for higher prices. Is it succeeding? Yes. Here we had a slight pullback, but then we went higher yet again. We'll need to see what happens here, but market is for the moment currently succeeding. So this was the pre-market checklist I always go over every morning. If you want, I will put this checklist as a downloadable file in the description below, and I hope this video was valuable for you and you learned a lot from it. If you did, consider smashing the like and consider subscribing to the channel, because I have a lot more content like this coming. So stay safe out there, trade safe, and I will see you in the next video. Bye.